Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we are going to cover the massive pump on Bitcoin as it does break out of its local downtrend. That compression energy has just been built up, and so when it did break that downtrend, as always happens when a crypto breaks these downtrends, it did explode to the upside, carrying along quite a few altcoins along with it, but primarily increasing the Bitcoin dominance, which is quite interesting, meaning that this move was led by Bitcoin and that this was a Bitcoin centric move. So, this is what we've been waiting for. We've been waiting for Bitcoin to show some strength, which we really haven't seen since the last time Chairman Powell was speaking, where there was just this God candle after Jerome Powell, and then what we can see, Jerome Powell spoke today, and we had yet another God candle. Now I'm going to get to the reasons for this in more in depth later on in the episode. But what I would say is that this is primarily being driven by the potential for the topping out of the US dollar, which has been suppressing the Bitcoin and crypto market along with stocks. So I'll get to that when I cover the US dollar in the risk assessments area of this episode. But just keep in mind the reason why we could be pumping is that a lot of people are seeing the dollar coming down, and that does suggest a trend for them to take advantage of. Now, yesterday, I was telling you that, guys, I was looking at all of this bullish divergence being built up on a Bitcoin, which was basically, look at this. This Bitcoin was 26% down. And if you guys know me from having watched my episodes over the last year, you will know that I recommend not buying at a 5% pullbacks or whatnot, but 15 to 20%, preferably 20 to 25% pullbacks when you do find support, and then selling when you get to that, 15 to 20% pumps. So you sell quicker and you buy deeper in that way that overall you can stay ahead, right? And be a happy trader just filling your pockets and without buying too early, right? You don't want to buy this type of a pullback. You want to buy this type of a pullback. You want to see that bullish divergence being built up. And of course, I was also pointing out to you how those divergences were starting to build up in the bearish control zone on Bitcoin's RSI, not just the MACD. And so we had both MACD and RSI. Here we go to the 8 hour, and you see that we just had multiple drives of bullish divergence building up on Bitcoin. And, when we're in the bearish control zone, those bullish drives of, divergence do tend to have more weight than if you're in the middle of the chart or in the bullish control zone, right? You want to see that bullish divergence in the bearish control zone. That gives you a high likelihood of a pop. Now, if we go over to the 12-hour, you can see the same thing. We did have a very clear drive of bullish divergence as we were just hanging out at the lows, and that did suggest that for a couple days we might have some type of a bullish potential on the chart, which is why we did see the turnaround. Now, if you were looking at the daily, it was kind of a weak looking drive, but it was significant. And while today hasn't fully closed, of course, you just can see, of course, that that divergence was there. So that's the daily. Let's pop over to the Bitcoin chart to see how the MACD looked. And of course, you can see that we were very much in that zone where we could have had that bullish cross on the MACD. And sure enough, we've put it in. Now, we have in the past had these type of crosses on our way to the downside where, we kind of have a fake out. Let's look over here on May 4th. Okay. Let's look at May 4th. Well, let's just expand this chart right here. There we go. This one right here, which looks very similar to our current situation, right? So basically we were chopping around for months. We kind of topped out. We dropped down. We continued to drop down, and then we had this spike on the MACD. We had this spike up. And what was the amount that we spiked there? 6%. We had a 6% spike. And then what happened? The next day, we just dropped to hell, guys. We literally just dropped to hell 40% after that 6% spike on the chart. And so, what I want you to do is just be very cautious about what's going on because sometimes you just have this contraction on the MACD. There's a nice, green day, just like what we're doing right here. You can see this is in a very similar area also, and you can have a spike up, but it can be a massive fake out to the downside. So guys, stay on your toes. Everyone and their grandma is going to be telling you to be hyper bullish right now because that's just how the crowd thinks. As soon as you start seeing green on the charts, as soon as you see things pumping, right, everyone tells you to go all in. Just change all of your risk management towards one direction, either super bullish or super bearish, and just to put on your perma bear, put on your perma bull cap, and just go for it. But the problem is we don't really have any confirmation that this is going to be a continuation of a trend. And so, if you do want to have just a responsible risk management, just understand that just because we have one little spike up, it doesn't mean that that's necessarily going to play out longer. Okay, you see this lonely little candle here, you see this MACD EMA crossing bullishly suddenly out of nowhere and then just dropping to hell. It can happen once, it can happen again, okay? So, these things happen, okay? These little things happen, and then you can just drop like crazy. I'm not going to make a hard call on this one. You guys can use your own judgment. I do think we are due for a mean reversion to the upside temporarily, but how long it plays out for, not sure. Not sure. Okay. Let's take a look at other factors, around that time, um, where we had basically this spike. Let's see here. We can also look at other eras just to see if there's anything similar. Maybe we go to the weekly. No, that's too far back. Let's go to the daily. Let's see here. Bearish control zone. Bearish control zone. Some type of a spike up. Some type of spike up. And then a rapid turn down. Let's see. ADX increasing. Maybe the 4 hour gives us some type of an analogy to look at. It's just too much mixed data. So I'm going to have to just leave that there. Let's go ahead and just trying to see if I can find anything that kind of matches this pattern, to be honest. There is this zone over here, which looks very similar. Yeah, yeah. Yeah, our ADX is much stronger than in that zone because of the current cross that we got. So there's nothing 100% comparable, but if I did suggest something, let's see if I reviewed this before. Yeah, let's take this one out. This kind of area over here on the daily, is that May 4th? Yes, that is that May 4th. Okay, yeah, so we do have a comparable setup on the indicators as this region right here, which did precede this massive drop off. And sorry for taking all that time just kind of thinking, but you do see on this setup as well, we also had kind of this downward channel that we broke above, and then we came crashing down. So I'm wondering if this is going to basically be a repeat, a repeat of what happened over here, as we are basically pumping, but our volume, our bullish volume is actually decreasing. I mean, in this case, it was increasing. It's just the sell-off was increasing more. But here we actually have our bullish volume decreasing. Let's see. Our oscillators were pretty much in the same region. This is pulling up nicely, but it's not sitting on top of each other yet. Well, a little bit. Very similar. Very similar. So what I'm looking at here is you see this yellow line. It's going to the downside. It's going to the downside, and basically we have this blue zone popping up, right? You see this blue line right here popping up. You see this blue line popping up, right? But what happened? The yellow just continued to go to the downside. Yellow just could continue to go to the downside. It takes a lot of effort to make that yellow turn up. And you do see this red one just chopping down. You do see this red just chopping down. And then the pink is cutting through, right? And the pink is actually kind of an indicator where it crosses the yellow of this all being over. And the pink is considering to cross over the yellow. Let's just clean this up a bit. You can see this is basically down. It's basing and turning up, down and basing and threatening to turn up here. But the pink still has a pretty big gap before it can cross the yellow. So we have quite the hurdle here to overcome. And this is not insignificant because this can just turn back down. This can just turn back down and keep going down while the yellow just keeps going down. So for my oscillators, it really isn't conclusive yet. However, however, this turn up right here on this teal line, this teal and purple line, that is just a massive difference between these two areas here. However, there is a very clear comparison to be made. And so if this teal oscillating line is rejected from this yellow oscillating line, that's going to be a very bad indication. If it turns back purple, I'm going to be pretty negative, and I'm going to be very wary of what comes next. If it does cross the yellow line and sits on top of it, and if the pink follows suit in the next couple days, perhaps over the weekend, then I'm going to consider this to be more like this area, which was actually incredibly bullish. So, um, hmm, yeah, this could be a contracted area on the oscillators compared to this previous area. And so I want to give that just a fair comparison because I'm also looking at that same area on the MACD, which also looks very, very similar. And so is this thing going to continue to the upside, or is this thing going to just spill its guts the way that it spilled its guts over here? Right? This was the critical moment. This was the critical moment. This is the critical moment. And we are literally in that moment. Again, that's that one little, it's that one little blue, day there that then just had a very, very rough couple of days after that. Okay. So from the big picture, we are not out of the woods. This hasn't confirmed anything. Looking at the RSI, let's go ahead and give the RSI just a look under this framework. And again, it's just a very similar look. So yeah, this was 5.3, 5.4, that day of that spike, just like we're having this type of spike right here. And right before then, it had had some chop, after this first drop from the bullish control zone, and just kind of skirting the top of the bearish control zone. And I'll have you notice something. This one had many, many, many more drives of bullish divergence compared to this one little bullish drive of divergence here. So, there was a lot more at this area's back, to support it to the upside, but it still fell down tremendously from the middle of the RSI chart, basically. So, do we get a rejection in this area, and does history repeat itself, and do we just fall off of a cliff? I mean, we're going to have to really watch this carefully because this is a weird institutional candle that's being put on Bitcoin right now. It's not like it wasn't a gradual thing. It was like a 4% drive in like 1 hour. I mean, that was an institution, okay? That was one of the exchanges. It's not just like that just suddenly happens, from interested buyers. It had to be some institutional purchase power. And if they can buy it like that, they can pump up the price and then they can drop the price just as easily, guys. So just be careful. But yeah, if we do a direct comparison, you can see that this analogy is still holding. So the RSI, the MACD, the oscillators. Let's go ahead and take a look at our volatility. And the volatility basically was doing something very similar. So let's see, May 4th right here. And we're right here, of course. And so you can see that we were basically coming down, right? We were contracting, hard contracting. We were contracting even harder than we're contracting here. But you can see there was a similar contraction just prior. And let me see. Yep, and we had not crossed yet. We had not officially crossed to start an expansion when we had that pump. And this is still to the downside, guys. Like this whole move was to the downside. So I'm not sure what's going on here exactly. Um, it could be just institutional buyers just came in and are pumping up Bitcoin. But again, guys, there's an analogy here where suddenly the volatility flips, right? And then the whole chart just comes crashing down. So let's go back to that price action. You see this? It just came crashing down right after that pump, breaking up from the diagonal. All of those things, the MACD, the RSI, the oscillators, the volatility, the price action, all very similar to what we're experiencing right now. And then it just came crashing down at a 40% crash to the downside after that. Let's see, what else can I look at? The RSI on the daily. Look at this, it's so similar, so similar. But this may be, so you can see like we had come from the top and then we had bottomed out and then we started to push up, just kind of consolidating. And then right here, see if there's a difference. And you see the Stokes volatility was coming from the floor to the upside, this rainbow bar, not the blue and red one, but the rainbow bar. And so you can see right here, Stokes volatility coming from the floor, rising up, and from the Stokes itself, coming from maxed out to the bottom, and then kind of consolidating, just like this. But there's a key difference here. We have some push to the middle of this zone. So the Stokes might be telling us this is the first piece of the puzzle that's totally different. Different. You can see that well, this was the fourth, so I shouldn't actually make that X there because that's what came next. And we could still cross down. And we would be very much in the same area, right? We'd be very much in the same area over here. So that was a horrible straight line. Let's do this one. Right? Right here, and like we're literally right there, guys. Like we're literally right there. See this red line and see this blue line? Kind of average them, and we're right here. So this thing could flip down, and then if it flipped down, this could be a massive fake out where it comes down here, double bottoms, and then it takes off, just like what it did over here. And let me delete these lines just so that you can see that a little bit more clearly. So basically the Stokes had been maximum, it came back down, maxed out to the bottom side, went up to the middle, and then basically it just collapsed from there and then double bottomed before going on to max again, to max out again. See that? So this is what could happen, assuming that this is an analogy. We're still in danger of just coming back down and having that epic crash while this thing comes back down to double bottom. Now it could continue its way back up and just top out, okay? And maybe I'm wrong. And again, I'm not trying to push you guys one way or the other. I'm just trying to examine this in a lot of detail so that you guys have all the information that you need to kind of analyze this on your own, assuming that you guys don't use these type of tools or that maybe it's your first time to think about it that way. I'm showing you what I'm using there. And then let's go over one more thing here. Maybe the direction-based volatility here. Let's see, 5, 4. Yep, right here. You can see this. Look how similar this is, guys. Topping out up here, falling down, bottoming out, pushing up, consolidating, and then 5, 4, a spike, that massive spike before a bloody crash. What's happening up here? Topping out, bottoming out, popping up, consolidating, and then a huge pop up, right? So we're not out of the woods yet, guys. Like this thing could come crashing down. And then what do you see? You see almost the identical pattern, right? And again, this, beyond this part is just projection. I'm just saying what's possible. So just keep your risk management on, okay? Even though everybody is turning bullish, just keep your risk management on, just in case, okay? I'm not calling it to the downside. I'm just saying something is suspicious. Something is suspicious about all of these indicators looking exactly like this area where we had the similar type of pop-up, right? Similar type of pop-up right there. And then we had a massive crash right after it, okay? So, I don't know. The setups are 100%, I mean, not 100%, I shouldn't say that. The setups look like 80% identical, and that's a huge, that's just weird to me, okay? Like usually we don't see such perfectly similar setups on all of the indicators and then it does something wildly different, you know? It's like that doesn't usually happen that way. So I'm going to be very skeptical until this thing proves to me that it can hold this level and that's not just some type of a fake out. In fact, if we look at this pattern, you can see here that we have this kind of diagonal bottoms up, right? Just going up here, just like this one, right? We have these kind of like three bottoms right here. And then we have this kind of broad topping that comes down. We have this kind of broad topping that comes down. And then we have this kind of ledge. We have this kind of ledge right here. And then basically we drop down and come back to the ledge, right? Drop down, come back to the ledge, and then fall to hell. Are we going to fall to hell? I'm only saying this stuff for risk management. I'm not saying it to be bearish. In fact, I'm bullish. I've been bullish for the last 24 hours. After I made my last video, of course, it took half a day for like the chart to kind of sort itself out. And, we saw that we weren't being rejected from the diagonal. We saw that we were consolidating under the diagonal and that there was a high likelihood that it could break up above the diagonal. And that's bullish, right? That's usually bullish on the local time frame. But look at all these weird analogies, Alpha Fam. Okay? I've taken you through almost all of these indicators. Let me look at the ADX because we haven't really looked at the ADX on the daily. Look at this. Look at this. May 4th. That's the date that we're looking at, May 4th. It popped up, the green line popped up above the red line underneath this consolidation area, right? The ADX was crashing down, but the green line popped up above the red. Got that? ADX coming down, green popping up above the red, pretty much in this consolidation area. Now, there is a key difference here. There is a key difference here, is that the green line, right, the DI positive, is pushing above the consolidation area, whereas previously it basically got rejected by it. Now this line isn't that significant. It's just a rule of thumb. It's not like a hard line. It's not like a structural line or anything. This could be just a complete coincidence. You can see sometimes things break above it, sometimes they bounce up, they don't even meet it, right? This could be just a coincidence that it broke down from that level, and you can consider this more as like a zone. But if that green line does continue to go up, I mean, we can't ignore that because traditionally the ADX does consider a consolidation to be under this level. That's why I have had it marked out here, right? I intentionally put that line there. So yeah. So yeah, I mean, there is a slight difference. There is a slight difference between the two. Just you need to be open-minded to the possibility, right? To the possibility that it is an analogy. May 4th pop-up right here. Now this one is a little bit more broken out on this. This isn't a really super reliable one, but this kind of like a fib-based indicator. Just it is interesting that we've been above it as opposed to having broken down under it and then popping up. Nevertheless, this pop-up is still in that same type of zone that ended up breaking down, and this one didn't bottom out yet. Same thing here. So on this fib-based indicator, this is a pop-up before hitting the bottom, and then eventually this blue line wanted to bottom out. So pop-up, but it didn't bottom out yet. So that could suggest possibility of a coming back down. Now, this was a lower high considered compared to these, and this is a higher high, so that's also one difference. But what we can see is that a higher, high doesn't necessarily mean it won't come down. This is a double top. I mean, this thing could double top, something like that. This one never reached the bottom. This one never reached the bottom. Never reaching the bottom is quite common, so there are some open questions. I don't want to bias you. That's why I'm taking all of this time to try to look for differences. And then if we go to the weekly, the differences should be even more stark. Let's see. 5, 4, we would be mid breakdown from the RSI. But right here on the weekly, we are threatening to break up above the RSI's EMA. So this is a stronger position to be in. This is a rejection position, potentially could get rejected, but this is a much stronger position to be in on the weekly on the RSI compared to here. For the MACD, you can see this even more clearly, where this was just a series of red bars to the downside, whereas this is a series of blue bars to the upside. Significant difference. One thing that I don't like is that the oscillators basically were turning down right after this kind of like white zone. It was turning down right above the pink line, and we're doing the same thing. It's hard to see, but you can see this white area turning down right above the pink line. So the oscillators on the weekly are against us, or not in our favor anyway. And you can see the weekly. This is actually significantly different, so I'm not sure what to make of this. Maybe the volatility just is different interpretation, but I'm not going to take a guess at that one. Let's see. Here, we were breaking down in May, we were breaking down from the EMA on the direction-based volatility, whereas here we're strikingly breaking up. Doesn't mean we can't come back down, but this does seem to be the other side of this move. And so for devil's advocate and to give credibility to both sides, this is a stronger position to be in on the weekly. And for our stochastic on the weekly, this is significant. This is very significant. So we were coming down from a top, and while this could turn back down, we're technically crossing to the upside and coming off of a max low, and only halfway through a volatility contraction on the weekly on the Stokes. So yeah, I mean, this could continue to the upside, and this could be a significant difference, at least on the longer period of time. Like, let's say for the next couple weeks, right? Than what we saw in a May. Yeah, guys. I mean, Bitcoin continues to pump, right? It continues to pump, and so I've tried to be as skeptical as I can. I've tried to give, as much perspective as I can to this move. Um, let's see if we can just take a look at the difference in the ADX. So on the ADX here, we were actually mid downturn, and well, to be honest, on the ADX, it's almost identical. So this doesn't look any better than in May, which was followed by a massive dump on the chart. So we do have the strength of this negative DI just moving to the upside. The ADX is just picking up, breaking across this threshold to the upside, but with negative DI, and that's not good. That's not good. So yeah, yeah. I mean, overall, I would say that the evidence is that this is still a fake out to the upside or some type of corrective move. And I think one of the, most scary things is that what if we just come up to 21,000 or 20. No, we would have to break above 22,000. What if we just come up to 21,000 and then we get rejected, hard rejected down, just like what we did up here. Just like what we did up here. This is what I think, just structurally, just based on price action, based upon these kind of Wyckofian structures, right? The signs of weakness right here. If this ends up being a sign of weakness, then it could forewarn a massive dump. This is very Wyckoff. This is a Wyckoff structure. Okay, you've heard of Wyckoff, right? Not conspiracy, but just a real Wyckoff structure. And then this looks very similar to that type of Wyckoff structure. So let's find out. Let's find out. I'm going to make this episode just about Bitcoin tonight, just because that massive pump on Bitcoin. I do want to show you just briefly what's going on with the dollar. The dollar just is decreasing tremendously based upon the European Union as well as Canada increasing their interest rates by 75 basis points each. Okay, so they've taken liquidity out of the global markets, which is bad for stocks and crypto. But here's the thing. They've strengthened the Canadian dollar and they've strengthened the euro by doing so. Because instead of the US increasing interest rates this time, being the responsible one in the room, having the dollar surge because the US is increasing interest rates, the eurozone and Canada has done it. And since the euro and the Canadian dollar are part of that basket of currencies against which the dollar is measured, that means that the relative value of the dollar can decrease. And if those zones and some other zones that are measured against the dollar continue to act responsibly regarding inflation, which they hadn't been previously, which is why the dollar had such strength, because the US was being the responsible one, whereas almost every other country in the world was being extremely irresponsible. You see what's happening in Turkey, right? They're having hyperinflation beyond control, and they refuse to make good policies. Well, the Eurozone and Canada just turned around. Japan might be next. If Japan starts to get things under control, then the dollar may have just topped out, right? Some of these other countries start taking control of the situation, right? Then the dollar may have maxed out. And while this chart could potentially go up to 111, it could go to a theoretical 114. This is as good of area to turn around as any. We've been following over here at Alpha Commission. I've been following this parabolic growth curve of the US dollar, and I noted back in summer that if we broke down, right, if we broke down across that parabolic growth curve, we would most likely climb up the underside of it until we maxed out and dropped. And that usually that breakdown from a parabolic curve indicates when a curve is breaking down, even if it continues to push up afterwards. So this was a significant push up after having broken down from that curve. And so it may be time to challenge this line and continue to break down. Not sure, just projecting, only if those other countries start acting responsibly the way that Canada and the Eurozone have started to do, so that they can strengthen their dollars against the US dollar, which is badly needed. And because the US dollar is what almost all crypto is traded in, right, as USDT has the equivalent in dollars, etc. Well, if you're trading against the dollar and the dollar is really strong, then your crypto is going to do poorly, right? Your assets are going to do poorly in the stock market, which are traded in dollars. And so having the dollar come down relative to those other currencies strengthens the position of crypto and other assets that are being repressed by a strong dollar as money flees into bonds, right? Basically into bonds with the higher interest rates that the Federal Reserve is giving out these days. And so if we look at USDT dominance, you can see we're breaking under my midline, perhaps going to test the bottom of this range after having explored the top and the middle. Could have some bounce up and then do it, but looks kind of like this thing wants to continue coming down. Who knows? We'll have to see. This thing has had dramatic bounces all over the place. I projected that it would get to the top here and that it might just fail to break out. It did have this kind of swing failure pattern or whatever, and it got rejected and just broke down. May just try to test the whole area again, right? We look at the VIX. VIX breaking down. Very similar to what happened here. Broke down before pumping up. This is what scares me as well, is that this breakdown that we're having is very similar to this area right here, where we basically consolidated, broke out of the wedge, came back into the wedge, made like a little candy cane, went to the top, faked out to the bottom, skyrocketed, horrible for trading, destroyed the market. What's happening here? Chopping around this wedge, broke down, came up. We're now making a little candy cane. Are we going to pop up to the top of this wedge? Bad for trading. Are we then going to break down, fake out to the bottom? Good for trading. And then skyrocket, destroying the market. That's what happened back here. This VIX doesn't have a lot of diversity if you look at these things. Whenever the VIX bottoms out, it skyrockets. Bottomed out, skyrockets, right? Bottomed out, skyrocketed. Bottomed out, skyrocketed. Bottomed out, skyrocketed. Bottomed out, skyrocketed. The only difference is in this wedge formation over here. And we're doing the same thing. So wedge, skyrocket, right? Is this thing going to break down? Maybe. We only have really one case to compare it to, but all these other cases suggest that when you've bottomed out, you eventually skyrocket even if you have this consolidation. We bottomed out, we bottomed out here, I guess you could say. And so where's our skyrocket? It suggests that a skyrocket should come up, and that's going to be hell for trading. It's going to damage the market. That's what I'm afraid of. Okay, guys? That's my fear. It doesn't have to happen, but that's my fear. Okay? That's why I call this like risk management, right? Risk assessment. It's called risk factors, right? This is a very strong risk, guys. Okay? The analogy that we're seeing on the chart to this previous area, right? That analogy, that's a very big risk. So just protect yourselves. Don't become a perma bear. Don't become a perma bull. Okay, trade what you can. Look, we're just skyrocketing. Bitcoin's going crazy. Bitcoin's going crazy. But it's happened before. It's happened before, and then we fell to hell. Okay? Take advantage of this move, but just protect yourself. These institutional candles sometimes are very dangerous. Especially after kind of a Wyckoffean kind of structure. Okay? But yeah, if we can sit on top of this area, if we can sit on top of 22,000, I'm going to have to reassess what's going on. If you could have caught this move at the bottom where there were these bullish divergences that I had pointed out on the last episode, then good for you. You got it. You grabbed the move. You saw the divergences that I pointed out. You saw the divergences on the RSI that I pointed out, the bullish divergences, and you grabbed the move. But if you missed it, and you see us approaching this resistance right here, we're like right there, right? And you saw what happened before. You saw what happened before when we did pretty much the same thing. Break down, pop back up to that zone, right? Meet some resistance, and then get shot down to hell, right? You've seen what can happen. So just protect yourself just in case. Don't FOMO in, right? Really think about it. Really think about your entry and your exit and your stop losses and your risk management, okay? Just trying to have your back, that's all. None of this is to be a perma bear. It could keep going bullishly. Just be open-minded to that too. It could keep going bullishly. But have risk management. That's your alpha for the day. Stay safe and happy trading.